Hello everybody, thank you for joining us for this webinar. I'm going to run through the slides which have been on our website since the announcements of the acquisition, and then there'll be a Q&A session at the end. So we could have the first slide please. So just in summary, Impax has agreed to acquire 83.3% of Pax World Management from its majority shareholder and one other management shareholder who's leaving the business. We've also agreed to buy the remainder, 16.7% in 2021 under a put-call structure. So Pax is an investment management firm based entirely in the United States. They have been in business since 1971, and they're one of the leaders in the field of sustainable development or investing linked to that area of the market. The assets under management at the end of August were just shy of $4.5 billion. Now, crucially for this acquisition, the bedrock here is a relationship that we've had together as two firms since 2007. So we have designed and then in 2008 launched together a US mutual fund, which is called Pax Global Environmental Markets, and that's gone from $1.5 million at launch, just seed capital, to over $500 million. So the relationship of the firms and the individuals who've been pretty much the same people in place for a decade is the core strength of this plan. The pro forma group, when we close the transaction, which I'll come back to in a moment, will have assets under management of $13.4 billion, just over £10 billion. That avoids the double counting of the Pax Global Environmental Markets Fund. And the combined group will be the leading investment manager dedicated to the sustainable development transition, and will really be a standout brand on an international basis. The implied value of the consideration or the transaction is $52.5 million. That's for 100% of the shares. And we've agreed to pay a further maximum of $37.5 million of contingent payments in early 2021 based on the performance of Pax World. Financing is a combination of cash, new debt, and a small number of Impax shares, which we will be issuing to the family vendor. And the conditions precedent include the approval of the mutual fund clients of Pax World. So next slide. So here's a bit more detail about Pax World. So they have 50 staff, all based in New Hampshire on the eastern seaboard of the US in a town called Portsmouth. They've had pretty strong performance, assets under management up 70% since 2012, and you can see from this table on the slide a nice progression of EBITDA and profit before tax. The client base, or the fund base, that Pax manages is also shown here. So 75% of the assets under management of Pax World are in actively managed equity and fixed income, with 1/4 in passive equity. Next slide. The strategic rationale for the transaction really is the opportunity to combine two pioneering firms that are both focused on the opportunities and risks arising from the transition to a more sustainable economy around the world. This is of rising interest from asset owners, and we're seeing a really strong pipeline from institutional investors and retail investors in most parts of the world with significant levels of saving. The combined firm will have a much broader range of investment strategies and products. It will have complementary client bases, and there's obviously significant financial benefits to the transaction as well, with an increase in assets under management, but more importantly, a very strong increase in run rate EBITDA with a very limited dilution in terms of new shares issued. In terms of benefits for clients, then the combined team will go from 30 at Impax, 15 at Pax World, to 45 investment managers and analysts, so that will make it one of the largest pools of talent in this space anywhere in the world. There will be an opportunity to share research and also certain specific skills around fixed income analysis, passive equity and risk analysis. And I've already mentioned the 10-year relationship between the two firms, which of course is essential if you've got people businesses which are coming together. The fact that people at the senior and mid levels know each other pretty well is a real strength of this proposal. This next slide shows the mapping of the skill sets. So these are not products per se, but just investment management expertise, if you like. So Impax historically has been an actively managed equity and passive, and rather private equity house, whereas Pax World brings deep US actively managed expertise for equities. It brings passive equity fund construction and management, and also fixed income management capabilities. On the next slide, you can see the breakdown of the transaction structure and consideration. So the initial valuation I've already mentioned of $52.5 million. The significant percentage of that will be satisfied in cash to the vendors. The selling family will also be granted $6.1 million worth of Impax shares at the Impax share price prevailing at closing. So that's not yet determined, obviously, but when the transaction closes. The remaining shares, 16.7%, which are owned by the management team, are already valued in terms of the consideration, and they will switch into Impax Asset Management shares in early 2021, again at the share price prevailing at the time. And then separate to that, there'll be an earn-out payable to all shareholders. The earn-out is based on a straight line formula, which is a zero earn-out if the assets under management of Pax World are less than $5.5 billion over 3 time slots in 2020. And that earn-out rises to a maximum of $37.5 million if the AUM at Pax is $8 billion or more at the same time period. There's also a possibility for an interim payment in 2019. The satisfaction or consideration will be made in cash to the selling shareholders, and for Pax Management they will get the Impax share equivalent again at the prevailing price at the time. The funding of this transaction is on slide 7. So the initial purchase cash out of the door of $44.2 million will be provided with a portion of Impax cash, $12.1 million, $26 million of new Impax debt, and then $6.1 million of that, as I mentioned, will be satisfied in terms of new Impax shares. The $12.1 million of cash leaves Impax with fully adequate reserves, including for regulatory capital. There have been some questions in recent years as to what we've been planning to do with our cash. I think this is a very positive answer to that question. But the disbursement of $12.1 million will leave us with plenty of headroom. The $26 million of debt is being sourced from Royal Bank of Scotland in 2 equal tranches, so $13 million of 3-year term loan with an interest rate of 2.9% over US dollar LIBOR. And then the second equal size $13 million component will be a revolving credit facility, which is going to be over 5 years with a slightly higher interest rate of 3.3% over US dollar LIBOR. If there is deferred consideration to pay, then we expect that to be settled from internal cash generation and possibly from a drawdown of the revolving credit facility, and that's why that RCF has been structured with 5 years rather than the 3 years for the term loan. We are also reaffirming our progressive dividend policy statement, so we do expect to be maintaining a rising dividend in terms of pence per share for all Impax shares for the foreseeable future. On slide 8, the integration plan is summarised here. So this is not a transaction which is predicated on stripping out a lot of costs, reducing headcount and duplication. This is really based on an opportunity for very significant increase in market presence through cross-selling of the strategies down the different channels. And so having paid, we think, a very sensible price for this transaction, we're not under any pressure to be saving costs. The brand plan is quite carefully articulated here, has been extensively discussed with all parties. So Pax Asset Management LLC, which is the management company based in Portsmouth, New Hampshire, will be renamed at closing to Impax Investment Management US LLC. That will retain its regulatory licenses to run US mutual funds. The mutual funds run by that company will retain the Pax brand name, and that's a brand name which has served it well since 1971, so we're very keen to maintain that brand strength. Then the investment management teams of the respective groups will remain separate to the degree necessary to maintain their culture and investment process, but we're already planning steps to share research and exploit other benefits around the knowledge that the two teams have got. In contrast, on the operations and support side, then we will be integrating those completely from closing, so there will be a global reporting platform for operations with a much stronger offering for clients in the full suite of back and middle office, risk management, finance, compliance and legal. In distribution and client service, then we do intend to integrate those teams over time, but that's going to take a little bit longer, so no rush there. But we're already working on the basis of 10 years of connection between those teams to promote and grow the Pax World Global Environmental Markets Mutual Fund. We're also putting in place a new, slightly expanded bonus plan for the Pax management team, which will include some restricted shares in Impax Asset Management Group PLC. The next slide 9 shows the switch from Impax standalone to what the combined group will look like. So you can see here the relative increase in revenue and EBITDA on the first two lines, the drop in cash as we fund the initial consideration. Our investments will remain unaltered, debt will go up. That's the sterling amount of $26 million there, £20.1 million. We are forecasting what the number of shares in issue will increase to. That's based on a share price which is somewhat lower than the one today. It's based on a £1.10 share price. So the share price remains roughly where it is today. By closing, then there'll be a smaller element of dilution. And there will be a new amount of intangible assets created as a result of putting the two businesses together. So just moving to wrapping up the slide elements of this webinar, then the timetable is set out here. It's pretty straightforward. So the announcement was on the 18th of September. Last week we had the general meeting, which was called for Impax shareholders to approve the borrowing, which was successfully passed. The resolution was successfully passed. Now the steps, conditions precedent to closing or completion include, as I've already mentioned, the approval from the mutual fund shareholders of Pax World Funds. So a solicitation document's already gone out to that group. We do expect one or two other minor conditions precedent, which we're working on at the moment, but we are forecasting on a conservative basis completion or closing by the end of February 2018, and it's not out of the question that could happen slightly sooner, even potentially by the end of the calendar year. So that concludes the slide presentation, but very happy now to switch to questions, and Charlie Ridge, who's here with me, may be jumping in to answer some of those.
Great, thank you, Ian, and a reminder to everybody to put questions in. We have a number already, so let's crack on. First one, it certainly seems very sensible to have a full suite of products to sell to investors. Can you just tell us whether you were aware from existing investors that they were keen to have access to a wider range of products, such as fixed interest offering? And following on from that, have you had any reaction, positive or negative, from your investors since the deal was announced?
Well, I think it's a situation which we've had to manage quite carefully, because pre the announcement we couldn't really go out and do extensive market testing on anything specific. However, we have had, since the announcement, informal conversations with a number of our European distribution partners who've expressed strong interest in the the concept of new products on the Impax platform, and we are in the process of pulling together information to share with those partners. So I think we're very confident of there being quite significant demand in Europe for some elements of what Pax is currently doing. In terms of the other direction, then we've had a dialogue with Joe Keefe, the Pax president, for some months now about what we would potentially focus on. So there's no concrete plans to roll out other impact strategies on the Pax fund platform, but there is very good fit there between one or two of the things that we're doing managed out of London and what that platform could offer. So nothing concrete right now, but strong indications that we're going down the right track.
Okay, and in terms of the two teams, if not competing, is it a case that there are so many dollars available that you're not going to be tripping over each other, or is it the case that you already know each other so well that there's an underlying agreement there, or is it a case that there are different products being sold by each side, so that again the risks of embarrassing overlap are diminished?
Well, the Pax brand is really promoted exclusively into the retail market, in some cases through intermediaries such as financial advisors, but it is essentially a mutual fund range targeting retail investors. As we found with the Global Environmental Markets Fund, then the partnership between Impax, which has essentially been targeting institutional and wholesale investors, and Pax World in the retail space is very synergistic, and so we've navigated any potential overlaps in detail over a decade. So these are essentially parallel channels. Where there is a small element of potential overlap, for example, in some of the big financial advisory groups in the US, then we already have a protocol in place, and in some cases actual clients, and so our two teams know how to navigate that.
And Ian, you quite correctly mentioned that it is hugely reassuring to have known and worked with an acquiree for many years beforehand, indeed a decade. What was the situation for Pax? Do you know if they have been in receipt of interest from other parties through the years?
So Pax has been a very distinctive brand for several decades, and certainly in recent years I think there's been a little bit of consolidation in this space, and I know that Joe's had approaches from a number of groups. We do understand that there was a process to sell the family shares last year, which didn't conclude with a successful transaction. And so when I first spoke to Joe about this in January, it became clear to me that there was an opportunity to have a go at trying to structure a deal without a competitive process going on in the background. And that was how it turned out. So we were very fortunate in being able to reach agreement with the family to buy the shares in principle in the later stages of the spring, and then we then took us sort of 3 or 4 months to put the documents in place. But during that time period, there was no sort of competition on our shoulders.
Perhaps a couple of questions for Charlie now. Ian referred to the gradual move towards central and global control of certain of the important backup facilities. Could you just elaborate a little bit more about the finance function and what pace of that central control can be achieved in the very near future?
Sure. So as you rightly point out, there's a number of different control and support functions that are at the moment duplicated between London and Portsmouth. So what we're doing at the moment is focusing on what are the essential items to get right on day one, so that we can have the proper control and oversight from London and the ability to report on a consolidated basis from the middle of next year. So March next year will be the first time at which we'll be including the results of Pax into our results. Pax have competent people on the ground that I've met and I'm looking forward to working with. We're currently putting together a detailed plan as to what we need to do on day one, which it will be separate from the longer term. Longer term, we'll be looking to have a more fully integrated back office support function, and those plans will be working on in due course. But for now, we're well advanced in thinking through what we need to do for completion, which could happen, as Ian mentioned, any time up to the 28th of February.
Okay, thank you. And then in terms of the loan facilities, which seem to be at attractive rates and with suitable flexibility for you, could you comment whether that was a competitive tender from the banking community?
Sure, yes it was. We saw a number of houses and went through a very structured process to get what we regarded were very attractive terms for the firm.
Okay. Going very briefly off-piste, could you comment about your existing Impax assets under management and just remind one of our audience what percentage of inflows and assets come from the BNP channel and the funds, approximately?
So Impax assets most recently announced were £7.3 billion, and that's quite a strong increase over the financial year. The inflows this year have been quite strong. I think we've had nearly £2 billion of inflows over the 12-month period ending 30th of September. The BNP Paribas portion of our revenues is just over a third, so this is pre the combination with Pax World.
Okay. And in terms of Pax, approximately how much of their current assets under management is in the passive funds sector?
So about 25% of their assets under management are in passive funds. About 25% is fixed income and half is in actively managed equity.
Okay, thank you. And then perhaps one or two more strategic questions to wrap up with. In the past, you've always portrayed Impax as not being an environmental fund manager, but a fund manager that invests in sustainable activities. Is that likely to change, given that you are now a #1 brand in this defined niche?
Well, what we've seen in the last nearly 20 years of developing Impax Asset Management is a burgeoning increase or a rapid expansion of the opportunities linked to the transition to a more sustainable economy. So in the early years, we defined these opportunities with the language of environmental markets, particularly focusing on clean energy, water supply and treatment, waste management, and slightly more recently, food and agriculture in a sustainable fashion. If you take the concept of sustainable development slightly more broadly, then it's been clear to us over 4 or 5 years that there are other areas of the economy that are captured by that idea, that concept. For example, healthcare, financial inclusion in developing countries, and education, for example. So over the last 3 years, we've been running a somewhat broader global equity strategy, which we call Global Opportunities, using some seed capital from our own balance sheet. And that global opportunity strategy is about 1/3 the environmental market space and 2/3 the other segments and components of the transition to a more sustainable economy, as I've just referred to. So in that context, the integration with Pax World is really very synergistic, because Pax has already picked up on this sustainable development theme, and their products are broadly defined, broader than environmental markets, but still fit within the umbrella of what we're now calling our global opportunity strategy. So to come to your question, then we see absolutely no reason why this area of the economy shouldn't continue to outperform in terms of rapid market growth and a rapid increase in the number of attractive companies that are growing earnings more rapidly than the mainstream economy. So absolutely no reason to change our focus and to become a generalist. As the world of active management gets more and more competitive, I think it's really advantageous to be in a differentiated firm with a very clear brand, known to be a global expert in one particular area, particularly when that area is showing such positive performance and very good prospects for the future.
And then final question, does the scale of the Pax deal satisfy your strategic ambitions for the time being, or are there potentially other transformational deals out there to look at once you've successfully integrated Pax?
I think the success of a boutique investment management firm has to be keeping clients happy and generating investment performance, while at the same time being an attractive place for important people, key fund managers and support staff to work. So we feel that we've done a creditable job in growing organically over quite a long period of time, sticking to a clearly articulated business plan. We were not really looking around for significant acquisitions, but when the opportunity to buy a group that we knew very well with a very closely aligned business culture and synergistic business plans came along, it was really something we didn't want to turn down. However, there aren't any other so compatible opportunities to grow in a quantum fashion that we're aware of. We will have our hands quite full for the next few years, just integrating the Pax acquisition and making the most of the cross-selling opportunities. So certainly for the moment, we're not looking around for anything that will be incremental, no more acquisitions. Having said that, I don't think we'd rule it out in the medium term. So there is an opportunity here which has got more than a decade to run to continue to serve clients with this interest and appetite for products and services in the space where we have expertise. So there's no reason some years from now why another acquisition would be the wrong thing to do. But in the meantime, organic growth is the focus.